I have been tracking my finances diligently for the past 9 years, and yet I made this biggest wealth mistake. Hey guys, welcome back to my channel. In today's video, I'll be walking you through what I have done right and what is the biggest wealth mistake I did. And you might want to stay till the end of the video because I'll be sharing how I'm going to fix it moving forward. Okay, quick story. So for the past 9 years, I have been tracking my finances diligently, and I follow the 50-30-20 rule religiously, where 50% is meant for needs, 30% is meant for wants, and 20% is for savings and investments. Initially, that 20% was all about building my emergency fund and paying off my debt. So once I had my emergency fund built up, then I shifted the entire 20% to pay off my debt. Even when I had bonuses coming in or unexpected income, everything went for the debt, and that's how I paid it off fast. So if you guys have not seen the video, you can check out the video here. I'll link it up above and down in the description box below. So anyway, once I had my emergency fund in place and I cleared off all my debt, then my entire 20% was meant for savings and investment. But here's the thing. I thought I was on the right track until I watched How to Get Rich by Ramit Sethi on Netflix. So in the show, whenever the participants wanted to buy something, he kept asking them where is the money coming from. So it happened a lot of times, and suddenly it just hit me, and that realization made me question, how have I been paying for all these one-off expenses? Where was the money coming from? So the biggest wealth mistake that I have been doing is to keep my savings and investment amount in the same bank account where my income is being credited and my expenses are being paid. So honestly, why I have been doing it like that all this while is because I felt that if I have a higher bank balance, means I'll be earning more interest. And the thought of investing is just fears me because of the risk, and I don't even know what to do for investing. Yes, I have tried here and there a bit, but definitely I did not invest all the amount that I had set aside. And the worst part, I didn't even set specific saving goals. So for my travel, my big expenses like wedding or anything, I didn't set how much do I need to save up for that, or how much am I allocating for that. Instead, I will just look at my bank balance, and as long as it's above the emergency fund threshold, I knew that I had the money to pay for these expenses, and that was really a wrong move. So because I wasn't tracking how much am I spending on this savings goal, I was actually eating into the amount that I could have invested. And on some months when I even busted my budget, I was also eating into this savings and investment money that I had set aside. So recently, after watching that show, I decided to crunch the numbers, and it hit me real hard. So assuming if I had invested $500 a month for the past 5 years, I know the number would have been high since I had bonuses and some other unexpected income, but let's just assume that I only had $500 a month and I diligently invested this amount for the past 5 years, means I would have invested a total of $30,000. So as you can see here, this is S&P 500 ETF's annualized returns over the years. Again, I'm going to take a conservative approach and just assume that my portfolio would have only made 8%. So I'm going to plug in all these numbers into an investment calculator, and let me show you guys what I have missed out in these 5 years. So assuming I had invested $500 and I do this every month for 5 years with an 8% return rate, my portfolio of $30,000 would have grown into $37,000. That is a $7,000 gain without any effort. I definitely wouldn't have gotten this amount through saving in the bank. If I were to continue doing this for 30 more years, I would have contributed a total of $180,000, and that would have grown into $750,000. That is 4 times what I had invested. Such a big mistake. Anyways, I am glad that at least I realized it now. Moving forward, I'm going to share with you guys how I am going to fix this. And by the way, if you guys are still here with me, then do consider liking and subscribing to my channel if you have not already. So this is my 3 steps plan, but before I share more, I want to caveat that this was purely based on my own research. I'm still a beginner in this. So if you guys are in a similar boat as me and you want to make a change, I would highly recommend to do your own research, because this plan is based on my risk profile and my lifestyle. So please do your own research before making any financial decision. Okay, so now the first thing I'm going to do is to take out my emergency fund amount and I'm going to transfer it to a high interest savings account. As of now, it is Chocolate Finance offering 3.6% per annum. So if they were to revise the rate and it goes lower than the next high interest saving account, then I'm going to move my money to the second best high interest savings account, which is CIMB, currently offering 3.2% for the first $50,000. Next, I'll be creating specific goals and I'll be specifying how much I need for each of these goals, like my upcoming trips and my expenses needed for the next 3 months of no pay leave. Once I have this number, I'm going to put in my portion for each of these buckets. And lastly, whatever amount that I'm left with, I'm going to be investing everything and I'll be splitting them into 3 different types of investment. Firstly, 60% of my remaining amount will go into the S&P 500 ETF. This is meant for long-term, like retirement. Secondly, I'm going to allocate 30% into exploring different types of investing. So it could be buying bonds, it could be buying individual company stocks, which is something that I've already been exploring. So that's something that I want to continue doing. And lastly is to allocate 10% for day trading. This is also something that I've been exploring the past 2 months and I want to continue exploring this aspect as well. So once I resume my work, I'll be allocating my entire 20% of my income into investment, since I've already allocated my money for the savings bucket. Unless of course our savings plan changes or there are new savings goals, then of course I would allocate some portion of it there and then the remaining will go to investment, and that's something I really want to do consciously. So that's it guys, that's the plan I have for now. If you guys have any other strategies that you guys are following, do share in the comment section below. I would love to learn. Thank you for watching and I'll see you guys in my next video. Bye bye.